When Bitcoin goes down to 40,000, are you going to buy? Everyone hates volatility, right? But I think as a present from the market,
It's like a sleigh ride.
it is, but the only reason people are scared of it is because they don't have a strategy, right? They jump in, see prices drop, and what do? They panic.
Is that when emotions goes up, intelligence tends to come down. So, and the more they panic, other people panic. So the selling just continues.
It's like the blind leading the blind. This is the problem with investors. They buy a lump sum and they leave it. And then when price goes down, they're like, oh my God, what do I do? What do I do? The market doesn't have to go up straight away. Actually, we want the market to go down.
Why, Elf? Why?
Because
I get messages all the time asking me how I went from 100,000 in bad debt to a $13 million portfolio. By watching this show every week, I will share exactly how I did it, how I achieved it, and the lessons that I've learned along the way. So do me a favor and please subscribe to our channel. It's simple, it's free, and it helps keep the show going for you. This is where you eat and we talk about changing the way that you think about money, with insights from successful investors, entrepreneurs, and everyday people taking control of their financial futures. So double check that you're subscribed, and thank you for being part of this journey. Ho, ho, ho! Welcome everybody to the Lunchtime Investor Show. That rhymed. Where you eat, we talk, and we're going to be talking about unwrapping this year's market lessons, and that's how to succeed in 2026. And we have here Elf.
yeah, nice to see you there, Santa.
Yeah, absolutely. It is, of course, Keith, if you didn't recognize him. So basically, what we're going to be doing is I'm going to try and laugh at every Christmas joke that you make. I'll be a big ho, ho, ho. All right, so what's coming up? Most investors spent this year really reacting like kids who didn't get the toy that they wanted. Ho, ho, ho. Meanwhile, the quiet winners stayed calm, stayed curious, were always learning, and stayed invested because markets go up and down. Don't panic. If your sleigh goes down, it's fine.
100%. Just get Rudolph to pull it back up and you're good.
Can you name any, apart from Rudolph, can you name any of them?
Blitzen.
Yeah.
That's probably
Donner and Blitzen.
Donner and Blitzen. Yeah.
Prancer.
Prancer.
And the other one.
And
Can't remember.
There we go.
Dancer.
Is it
Dancer, Prancer, Donner and Blitzen. But of course it is. I should know. Okay, what 2025 really exposed about what most people want, and how to turn reflection into a clear 2026 plan. We need to have a plan in 2026.
100%.
Okay? And we have a present for you, and that is a simple framework so that you can start 2026 really, really well. So I've got a question for you.
Yeah.
What do you want me to call you?
Elf. I think
Elf.
Elf's fine. Yeah, I think Elf will be what? It'll work.
What happened this year in the market, Elf?
So this year in the market, we've seen one of our favorite friends of the market come into play, volatility, right? We've seen prices go up, down, up, down, up, down. Everyone hates volatility, right? But I think as a present from the market,
It's like a sleigh ride.
it is, but another Christmas gag there. But with volatility, if you don't have movements in price, you never make profit. So why would you be scared of volatility? The only reason people are scared of it is because they don't have a strategy, right? They jump in, see prices drop, and what do? They panic. They go, prices are falling, sell. No, if prices are falling, we buy even more. So I think there was a lot of volatility. Now, the reasons why there was volatility in the market, obviously you had Trump, you had the tariffs, you've got what's going on in Russia, Ukraine, you've got China. There's so much going on, but all of that has just caused that movement in the price, right? And one of the biggest challenges is when there's an increase in volatility, there's an increase in emotion, and not logical emotion from investors. They panic. And again, I think the famous saying is when others are fearful, we are greedy. When others are greedy, we're fearful. And a lot of the market has been fearful. We've seen big drops in the market, people selling. What have we done? We've been buying. So I think that's one of the biggest things. And then obviously you've got AI driving price up. You also have the crypto volatility still there. And we spoke about it. Well, I spoke about it with Marcus. But we spoke about the crypto cycles potentially being broken as well. And that's definitely something to look into for 2026. Is crypto going to go into a bull market, or are we going to follow what the cycle is in the stock market?
Because it has come down. It has definitely pulled back. Yeah. People are definitely fearful, no doubt about it. There's a lot of emotion. And the other thing that we always say is that when emotions goes up, intelligence tends to come down.
Yeah.
So people are panicking. And the more they panic, other people panic. So the selling just continues. That seems to be happening at the moment.
It's like the blind leading the blind.
And I wonder whether there's going to be some kind of a Santa rally, really. Let's talk about that.
Yeah.
Let's talk about the Santa rally. Let's talk about my rally, the Santa rally. People really love talking about a Santa rally this time of year. What is the Santa rally? What is it?
So in very simple terms, a Santa Claus rally is a boost in price by the end of the year. So we see a lot of the bigger assets, your Nvidias, your Microsoft, your Googles, your Apples, all tend to go up in price. Now, if you look at something called seasonality, how this happens every single year, we have Thanksgiving in the US, where everyone takes time off. The market tends to be bearish just after Thanksgiving.
And that's November?
That's end of November into December. And then after the dip in the market, we then see big institutions buying into the market. Why? Because they want to window dress their funds, right? They want to show all new investors that come into the new year. Remember, new year, new me. They go, look, we're investing here, 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 here. This is what we've got as our portfolio. Give us your money and we'll invest for you. So that's kind of what they do into the latter part of the year.
I actually can't take you seriously. I mean, it's ridiculous, this outfit.
Well, I think it's a bit big on the arms. I'll give you that, a bit big on the arms. But I think it works. I think the shoes are the best thing.
Shoes are brilliant.
I can't even get them through the table. Look at that. Got the shoes, and it also come with baubles.
But so markets don't always rally in December.
Well, seasonality-wise,
I thought the idea was that everybody spends a lot of money. Now they've got Black Friday, which takes a lot of it out of it. But you know, they're spending money, retail, and then if retail announces really good figures, then the stock market tends to go up.
It does, but don't forget, the retail figures in December don't come out till January. So technically, you won't have a boost in price. The figures that come out in December is the figures from November.
But
so
they can tell you roughly whether things are going
They can somewhat, but I think one of the biggest problems we did have this year is the government shutdown. There's a delay in a lot of figures coming out.
This is in the US.
In the US, yeah. So there's a delay in a lot of the figures that are coming out. And for me personally, I don't really look too much on that because people do spend more in December, right? We all know that. But I think the biggest thing that is going to drive the market is, are institutions going to carry on this AI bubble? Are they going to carry on buying into the AI race, the bigger companies?
Do you think it's a bubble?
Well, everything's a bubble, right?
Well, that's right, because George Soros says when you see a bubble forming, jump in.
Yeah.
Whereas most people say, there's a bubble forming, get out.
You don't know how long that bubble's going to last. That bubble could be a year, it could be 10 years, it could be 20 years.
I think it's got a way to go.
Look at tech.
Isn't it the only thing, though, that's driving the markets, though?
It's one of the biggest things that are driving the markets. And this is where you see a lot of volatility come into play. Look at Oracle last week. Oracle had bad earnings. And what happened? The market tanked. A lot of AI companies started to selling off, people taking profits. And because they were selling off, that drove the market down.
Did they do really badly? Because my mentor thinks that they were overwhelmed with too many orders that they couldn't fulfill.
Yeah, I don't think that they've done too badly, but it's the point of AI, right? The theory is great. It's the narrative of we're going to do this, 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 this. The problem is the theory is so far ahead of the application that a lot of things that they're saying they're doing, they can't apply it into the real world just yet. And I think that's the thing, just yet. It's a foundation that we're going to have in the next couple of years.
Okay, so away from the markets, I think the way to prepare ourselves for next year is always the 80% of success, which has got to be the mindset, right? So at this time of year, it's easy to focus on what we want, but real progress starts with how we actually think.
Yeah.
So here's a powerful message from Jay Shetty. What he was the monk? Was he the monk?
He was the monk
with the Ferrari, or was that somebody else?
I think he had a Ferrari. But he was a monk. Went to the monastery.
Yeah.
Done all of the monk things and then come
done
out.
All the monk. There you go. He done all the monk things.
But I think he did really speak about more on the. How can you say it? The dependency on money, the dependency on what the world is looking like right now, and how detachment can drive you forward.
Yeah. So changing your relationship with money has got to be the number one thing that you need to focus on. So let's go ahead and listen to this clip and let's see what you think about this, Elf.
You can change your relationship with money. You can stop chasing it out of fear and start building it from wisdom. You can stop using it to impress and start using it to invest. You can stop hiding from your bank account and start owning every number. You can stop saying, I'm bad with money, and start learning like your future depends on it. Because it does. You can rewrite the money stories you were raised on. You can replace guilt with clarity. You can replace shame with strategy, scarcity with intention. It's not about how much you have, it's about how you treat it. And how you treat money determines whether it stays or leaves. Money is energy. It flows where it's respected, not feared, not avoided, respected.
You're having a little trouble there, Sana.
Well, what do you think about that then, Elf?
I think one of the things that he has said is if you live life in scarcity, okay, you never have that abundance. Okay, scarcity stops that abundance that's coming into play, and you're always chasing the next buck. You're always looking at the short term of what can happen. Where can I get this? I need this now. I need it. Rather than thinking in the bigger picture of, okay, if I know that I could provide value, okay, then the money always flows in. The more that you provide value to yourself, your business, and everyone else around you, the more money does flow in. It's natural. So again, if you live on scarcity, 9 times out of 10, you're not going to be moving forward.
Yeah, absolutely. I do believe this thing about everything is energy, and energy is everything. And so what you focus on, that is what grows, generally speaking.
Yeah.
So what is that famous phrase about what you focus on, your energy flows and the results start to show.
Mm-hmm.
And I think a lot of people, like finance is this thing that they don't really focus on. It's like this peripheral thing that they're kind of scared of. There's a lot of negative emotional attachment to it. And once you realize that it's just part of your life, that's all it is. And if you focus on it, if you focus on your health, it'll get better. If you focus on fitness, it'll get better. If you focus on relationships. By the way, it is a relationship. We have a relationship with everything, including money. So what is your relationship with money right now? And would you like to know? How would you know? How do you know?
I think relationship with money always comes from what you've learned in childhood.
So, but how do you know? How do you know what your relationship with money is? How?
But you just got to look at yourself. Like, if
just
you're,
look at your
if
bank
you're
account.
slender,
Look at your bank account. If you've got lots of money in your bank, you have, or in investments, you've got a good relationship with money. Question, Elf, can you change a relationship?
Of course you can.
Of course you can. And so if you don't have a great relationship with money right now, doesn't mean you won't have one going forward. So 2026 is all about changing that mindset towards money. Can I become a great investor? Of course you can.
100%. But again, I think one of the biggest problems people do have is I want to change. I want this. I want that. I want it. But they go in with just wanting and never have a plan.
Oh, God.
If they don't have a plan, then they can't really progress forward. So I think having a plan of how am I going to change this is number one. And then again, surrounding yourself with the right people. Like if you plan your goal,
The right elf.
right? And this is why you've become you, right? You surround yourself with the right elves, like myself. And again, it's always about if I surround myself with the people that are on the same journey with me and the energy flows, we all move forward. I think Elon Musk is one of his favorite words, vectoring, if that's the right term. And that is where all forces move in the same direction. If you've got a majority of the forces moving forward, let's just say 50% of people moving forward, but on your community, and 50% pulling people back, you're not going to move as a community, right? Because you've got that counteracting force. So if you vector all in the same direction, you all have the same energy to the same type of goal, then there's no reason that you can't change a relationship with money, with health.
So get your family involved as well.
Yeah. 100%.
Absolutely. And you never know who in your family might be a real star investor. It might be somebody who's older. It might be somebody who's younger. I think it's fascinating, but get them involved. There should be no fear involved. It should be exciting, which it is, I mean, quite frankly. Okay, so let's see. Fear-based money decisions. They really keep you stuck, don't you? A bit like last-minute Christmas shopping.
Yeah. Which I think a lot of people, myself included, are going to be doing that this year.
Oh, really?
Last minute, yeah.
Okay.
I always do things last minute, I think.
That wasn't really the point of that.
No, but leaving, when you have fear based on money, again, fear is just scarcity, okay? If you have that around your money, you do not want to spend, okay? Or you might overspend. All of a sudden, you don't enjoy life. You can't get the experiences that life has to offer you if you don't have the finances behind it, okay? People say money does not solve all problems. And I would agree, it doesn't solve all problems, but it does solve a majority of them. And it's all about how can I get my finances in the right position.
I tell you, some people say things like, yeah, but love is more important, family is more important. But I've saved, family members' lives by being able to spend money on them being helicoptered to the nearest clinic and getting a brain scan sharpish, and then they had to have immediate, 2 major operations on their brain. So money does really help. It does solve a lot of problems. But the idea is it's this emotion. People seem to think that when markets go up, it's great, but if it goes down, it's terrible. Whereas really, if it goes up, then you just do what you're supposed to do, which is take some profit. If it goes down, you just buy some more. There's no real emotion involved, right? There's no panic or anything like that. I think just financial education in general is pretty much non-existent in this country, isn't it?
Yeah. And when you talk about finances, it will always start from the school system, right? And we say it time and time again. In the school system right now in the UK, we do not talk about finances, okay? When you're growing up in families, when you talk about money or talk about wealth or talk about abundance or overflow, it's always negative. Have you not seen that? It's always negative. But if you look at it a different way, abundance is something that we should all want to do or all want.
Well, I don't think people don't generally like rich people. They say, oh, those bloody rich people.
I think it's hard to say, but I think it does come down to jealousy in that sense, right? You do not know what rich people do.
I'm going to test you, Elf, now.
Yes.
What's the difference between jealousy and envy?
So envy is, I want to be that person. Okay, so your success of being Santa and having a great workshop. My envy is I want to be in that position, right? Jealousy is I want that, so you can't have that.
So you don't mind me having it; you want it as well.
Yeah, so
I think it's really important. There's nothing wrong with being envious. Oh, I'm so envious. I wish I had that. Show me how to do it. As opposed to jealousy, you try and trying to bring them down. A lot of people try and bring other people down.
And being envious is motivational. You should use it as motivation of if they can do it, I can do it. Being jealous, that is not where you want to go. Now, a lot of people could be jealous of the people that are rich because they want that lifestyle. Now, again, you just see the forefront of, they're rich, they've done this, silver spoon in the mouth type, blah, 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 blah. But a lot of rich people have put in the hard work. They they are not born rich, let's just say.
I think they say that the first generation makes it, the second generation, they kind of spend it. In the third generation, you're starting from afresh. They don't have a clue what's going on. It isn't actually passed down. There's no such thing as legacy. That's why you can attack the Rockefellers and some of the other really rich. But one thing that those families did well is to teach the next generation to keep growing that wealth.
Yeah, intergenerational wealth is a key point to this, and this is again what do a lot of the rich people do? They don't just sit on their money. They make their money work harder for them. Absolutely. And they acquire businesses or they invest in stocks and shares or cryptocurrency. So they have their money flowing, okay? Because once your money is sat still, stagnant, it does not grow. Just like energy, when energy flows.
It's the opposite. If it's stagnant, it's actually the opposite. Because of inflation, you actually lose money.
Correct.
So tell me, what kind of wealth beliefs do we need to leave on the naughty list this year?
On the naughty list, I think, number one, wealth is not for me. Because growing up, we believe it's only for the small population. That's the first thing.
Yeah, those rich people.
Yeah, those rich people over there. Wealth is for everyone. Okay, there's a lot of money out there. It's all about how can I get a piece of that.
Do you know what? Immediately, when you say it's for everyone, I know that some people will start thinking, well, hello, what's this? What is this?
It's a mistletoe, I think.
Oh, hello. Oh, Elf. What, shall we save that for later?
Later.
Yeah. Okay. So basically, they say, well, but not everybody can be rich. Do you know what I mean? If you say everybody can be rich, we need people that are also doing other jobs. You can't all be rich. And then they switch off their minds. You can't all be rich.
No, of course. But there's a difference between being rich and financially independent. Okay. Also. Your financial independence could be different from mine because we've got different lifestyles. But everyone could be financially independent, but not rich.
Well, I've got to feed a lot of reindeer. Whereas what do you do?
I have to build a lot of toys. Run a lot of people.
Yeah, and who pays for those toys?
You.
Enough said. All right. So the money belief that you think should go with the naughty list is wealth is not for people like me.
Correct. That's number one. Yeah. The second thing that I think is massive is investing and trading is hard.
Okay? Is it though?
It's
I
not.
mean, the market does all the work.
The market does all the work.
You basically click like that, and then you're a shareholder.
There you go. But it's all about having the right strategy. The reason people believe investing and trading is hard is because of the institutions, the propaganda. They make it seem so difficult that you give them your money to them for them to invest.
They use such complex words and phrases, you know,
100%.
and then you think, oh, I'm stupid. I've got to give them my money.
Yeah.
Crazy. Okay, so those are the two things. All right, let's have a look at this. Now, not everyone feels festive about investing right now. And here's someone whose motivation melted like a snowman in the summer. Oh, oh, oh.
We got a little joke about a snowman.
Yeah?
What does a snowman wear on his head?
A hat.
An ice cap.
Very good.
You like that one?
Very good. I mean, it wasn't that good. But... All right, hard to find the motivation to invest after losing 100K over the last year. Now, that's interesting. 1 year ago, my portfolio was worth 475 plus. Is that pounds?
Dollars.
No, but 475,000.
I assume so.
I think he's made a mistake. I spent the last years putting as much as I could afford into the market. So probably, you know, they've got a salary and they're putting every month, which is good. We applaud you for that. Now it's worth 375,000. Okay, so that's where the losing 100,000 comes up. About 50K is cash that I've accumulated, but I have not invested due to the downturn. No, that's the time you should be investing.
Yeah.
Oh dear. So I probably lost closer to 130 as I've been feeding the account every month. I have zero motivation to keep investing because it feels like it keeps going down. I know we all say it will go back up, but I feel like I'm throwing it away. First of all, has he really lost this money?
It's unrealized. Unless he's sold.
He hasn't sold.
Unless he's sold.
He hasn't lost the money.
But the question that I've got is, okay, you've invested your money. Your portfolio was looking good. Did you ever take profit on what you invested into? Number one. And then number two, the 375,000, okay, let's just say 325 because 50K is cash. What is that invested into? Is it invested into the strongest assets which you believe cannot go to zero? And if the answer is yes, why not buy more to bring the average cost down? Because this is the problem with investors. They buy a lump sum and they leave it. And then when price goes down, they're like, oh my God, what do I do? What do I do? Because they don't have a strategy. And then they panic because they feel the asset they bought into can actually go to zero. And then they don't want to buy more.
I mean, now it sounds like, depending what he's investing, you're absolutely right. You know, like if you were investing in a factory that basically produces reindeer fodder, that would be a great investment, I think.
Is that a new business?
I think so.
Alongside the workshop?
Don't tell anybody. That's my idea. Trademark stamped.
We can acquire it together.
Well, I don't know about together. You're an elf. I am Father Christmas. It's a bit different. You can work on it if you like.
Okay.
All right, brilliant. Yeah, I think you're right. I think that, you know, depending on what they're investing in right now, he's got 50K cash. Bring that average price down, but of course we'd have to look exactly at what is going on. But he hasn't lost 100,000.
No.
It's unrealized gains. I think that's really important that people don't realize. People go, oh my God, I've lost 100. Yeah, I haven't lost it. Unless you need it right now, in which case you need to sell. Okay. One bad present doesn't ruin Christmas. Ho, ho, ho. Just like one bad week in the markets doesn't cancel a good year. But it is true that you can, within a space of a few days, you can have a massive rally or you can have a massive... You know, they say that in about 9 days or so, if you're out of the market, that's where all the gains are made. So time in the market is so important, isn't it?
Never try and time the market because it's very hard to say where the bottom is. Look at crypto right now. We're having a bit of a dip in the market. Everyone's panicking. And then you always go back, as they say, zoom out, look at the trend. But you have to ask yourself, okay, Bitcoin's down 35%, let's just say.
The fundamentals are so good.
There you go. Is it going to go to zero? The answer, there you go. So again, why panic? Why panic when you see that? It should be that opportunity of, okay, it has dropped, my time to buy. Let's stop panicking in the market. And this should be a goal for 2026. Let's just follow a simple strategy. Something that you know is proven and is profitable. And then you can follow it into the market every single day.
But most people don't have a strategy.
No.
Right. And then they wonder, you know, I buy something. Oh, it didn't go up. Well, you had a 50-50 chance. Sounds like gambling to me.
It is.
Okay. And the other thing is, of course, there are market cycles. And it doesn't mean that this person is bad at investing. It just means the market cycle is down. and the institutions are rotating out of whatever he's or she has invested in and is rotating into something else. And they'll rotate back in again as soon as it's low enough. It would have been good to maybe buy some more of whatever it is. And the question is, why didn't you buy more? Did you not believe in what you're investing? Let's say you have Amazon, great company, or Microsoft, or Google, or even Nvidia.
Yeah.
Let's just say that they're at this price. Well, you surely at this price, if you like it at this price, you must love it at this price.
100%.
You must get engaged at this price. Marry the damn thing at this price, no?
Well, it's definitely dropping, but this is the point, right? We what do we call it? As the price is falling, they call it squeaky bum time, right?
Yes.
When it's down 50, 60, 70%. If you believe that company cannot go to zero, number one, and number two, has a opportunity to go up in value, then why not invest? Because a lot of people would
That's
say...
you in Celsius.
Yeah, in Celsius. But look, it took a year and a half. Okay, love the brand. We drink it in the office every single day.
You really do.
We do, yes. We love it. But again, a year and a half, the fundamentals were going up, price was going down. It's that divergence as an investor we want. If you're seeing price falling, but fundamentals of the company...
divergence is when the fundamentals are great,
and
but the price is going down. They're diverging from
each other.
Yeah.
And that is the best time. Because what happens is, as fundamentals come up and price comes down, it will interlock it with each other, where something known as fair value is purchased. What is fair value? Institutions, investors go, this is too cheap. This is a great time to buy. We're now buying.
But it's the other way around as well. It's a great time to sell as well. If you've got a company whose fundamentals are getting worse and worse and worse, but for some reason the price is being pushed up, I wouldn't sell short, but it would be time to maybe get out. Certainly.
Look at Intel at that point. Intel's fundamentals were coming. Now they are beginning to recover, but as their fundamentals were coming down, price was going up because of the AI bubble.
I think they were more saved, weren't they, by Nvidia, really?
I think they were saved than Donald Trump. But one thing about this, just quickly on market cycles, we talk a lot about Steve, the worst timing investor
in the world.
Yeah, and what does he always do? He invests at market highs.
At the top.
Did he make money at the end?
You did.
There you go.
Yeah.
So again, could he have made more money investing on the way down?
For sure.
But over the time, how much does the stock market go up every single year?
Well, it depends who you listen to. So when it comes to the last 15 years, it seems to have averaged around 10% a year.
There you go.
But over a longer period of time, it's around 6.97%.
A lot more than you get in the bank.
A lot more. And yeah, absolutely. Bigger than inflation. So what's there not to like?
There you go. And this is the point of invest into an asset which, number one, you believe cannot go to zero, but number two, you believe will go up in value. Once you match them two together and marry them together, you're going to be completely fine, and then follow the strategy.
Now, it's Christmas time, so we're going to see whether we're naughty or nice, okay? Have you been naughty or have you been nice?
I would say I've been nice.
Yeah, you always say that every year.
It's down to your list.
But the truth is, I mean, let's face it. So you're naughty.
Okay.
So let's do that. You do the naughty reaction. I'll do the nice reaction, because I'm Father Christmas after all, right? So response to volatility. The naughty response is?
They're very emotional and impulsive.
Yeah, it's reactive, isn't it? The nice investor is reflective, right? Yeah. Responding more than reacting. So reacting and responding. Calm, planned. Very good. The decision driver, what would that be for the naughty reactive investor?
Simple propaganda, headline and fear.
Nice investor, reflecting, would be strategy and data. That's the most important thing.
Yeah.
Okay. What about vision? What are you after?
They're looking for immediate gratification, short-term gains.
So short-term. Well, mine would definitely be long-term, but it would be nice if something goes up 100% within a few weeks. I'll take it. Results, what would they be for the naughty investor?
Regret. I think regret is definitely one. When you see a naughty investor, as we say, invest into something they don't truly believe or don't have a strategy, and price drops.
I like when you say I say naughty, you say naughty.
Naughty.
You're being naughty.
It's a Cockney way. But if you look at that point of you regret to invest because you've invested and price didn't go up, it went down, and you're regretting your decision, then you're just going to carry on selling and not make money.
For the more the nice investor, the results clarity and confidence.
Yeah.
Clarity and confidence. So let that be 2026 for you. More calm and planned strategy and data, long-term expectation. Sure, if something happens in the short term, we'll take it. And clarity and confidence. Yeah. Okay. One, unwrap stress, like a Christmas present. Ho, ho, ho. The other unwraps opportunity. Okay, that's what we're really talking about. Okay, let's talk about 3 ways to succeed in 2026, right? What kind of behaviors must people have into 2026?
I think number one, just remain calm. That has to definitely be a bit of it, because again, the market will create a lot of uncertainty. The market hates uncertainty.
Yeah.
When the market is uncertain, guess what happens? Price always drops.
Yeah.
Okay.
But that's an opportunity.
It's a great opportunity.
Yeah. People don't get that, do they?
90% of people don't get that
No.
out there. And this is the point. We have more flexibility than institutions as well.
We do.
Right? We can invest into different assets. We can move money from one asset to another. We can take profit when we want. Institutions can't do that.
I feel sorry for institutions, when they have their marketing brochure and they just focus on one thing, whatever it might be. Let's say it's like utilities. And there's all these other things, and they're like, I wish I could get in there. And utilities is not doing anything. Whereas, as you say, we can have a bit, that's gone down, so I'm going to buy a bit of that. That's gone down, so I'm going to buy a bit of that,
Yeah, it's having that flexibility and not living in scarcity.
What else? What about
know that there's opportunity?
What about things like keep learning, keep growing?
Yeah. Easy saying, if you're not growing, you're dying. I think that's the first thing.
Yeah.
You have to definitely keep growing. In the market, no one knows everything. Okay, the market is always going to teach you, and it's all about how can you react to that. What was it in Rocky? Where they say get knocked down 8 times, stand up 9. The market's always going to knock you back, knock you back, knock you back. And
That was a phrase out of a Rocky film?
I think it was out of Rocky. I've seen it.
You just made that up.
Could do. We can copyright it. But again, the main point of that is the market is always going to teach you lessons. It's always going to knock you back. You're always going to make mistakes. It's all about how do you overcome that? Do you just say, right, I'm done, I give up? Or do you go, right, this is what I've learned. Let me now move on.
You paraphrase it when he's talking to his son. You mean it's not the amount of times that you get knocked down. It's the amount of times
get
you get up.
Yeah.
All right, come on.
I love
Make
the
an
accent
effort,
as well.
but-
The accent was on point.
Thank you, everybody. And also just showing up consistently. You can't dip in and out of the market. I think it is something that you do, just like working out several times a week. Look at the market several times a week. Are your positions up? Do you need to sell some, trim some? Are they down? Do you need to add? It's so simple, really, isn't it?
Treat it like a business rather than a gamble.
Let's all do this in 2026, everybody. Why don't we do this? Right, come on, let's do this. Right, put your hand on your heart. You're not sure where your heart is.
No, apparently it's in the centre.
Yeah, but it's not on that side.
Yeah, but...
Oh my goodness, you went to the wrong side.
Did I?
It's either in the middle or the left.
Okay, I'll go middle. I was right the first time.
Okay, fine. And repeat after me. I, Elf, do solemnly swear
do solemnly swear
to start my new time business.
to start my new time business.
What did I say? My new time business.
New time business.
No,
okay.
no, no.
I thought you
Okay.
said Thai business.
No, you're right. My new part-time business,
My new part-time business,
which is
which is
investing
investing
and growing my wealth
and growing my wealth
in less than 20 minutes a day.
in less than 20 minutes a day.
I do so solemnly swear.
I do so solemnly swear.
And now we got to do some kind of a blood pact. Have we got the knife, Martins? Have you got a knife? We want to do a blood pact.
What? The blood pact?
No, we'll do it later.
Yeah, okay.
Gosh, there's a lot we're going to be doing later. Well, hey. All right. Well, listen, I'm great at delivering presents, as you know.
Yeah.
Ho, ho, ho. I'm not so good at timing the markets. It's time in the market that is more important than anything else. I have a question for you, Elf. For someone who knows that mindset matters but doesn't want to do this alone, what can they do? What actually changes when they follow a proven framework?
Number one is you build confidence in yourself and you believe that you can do this. Because right now you might be all sitting here going, oh, they took a great game, but the normal person, cannot do this. We want you to change that mindset because the normal person can invest and trade. And we've got great books out there, The Lunchtime Investor, The Lunchtime Trader, teaching you about stocks and crypto. But that's the first
Well,
thing.
shall we give them a present?
I think we should.
Yeah?
Yeah, in their Christmas stocking, rather than coal,
Yeah?
we give
Rather than coal, what we
Rather
give them? Okay. Don't let this year's lessons gather dust. Get educated, build a plan, start 2026 prepared. Access 2 of my books for free. So this is a present. The Lunchtime Trader, which is about stocks, and the Lunchtime Investor, which is about cryptos. And you can basically download them below. So, final thoughts. What are your thoughts?
I think final thoughts is we've got an interesting 2026. But again,
Now, what if I said to you, but what if the market doesn't go up? I need it to go up.
you need it to, but that is scarcity. If you carry on living in that scarcity, you will not make your money work for you and your money will just disappear.
Right.
Okay? The market doesn't have to go up straight away. We want the market to go down.
Why, Elf? Why?
because we are able to buy at cheaper prices.
That's right.
Imagine Bitcoin right now, 80,000. Imagine Bitcoin goes down to 40,000. Are you going to buy? Imagine Bitcoin goes down to 20,000. Are you going to buy? If we know that it's going to go back up to 120,000, why would we not?
Wow. Yeah, but how do you know it's going to go up to 100?
Because of the fundamentals. You don't know where the price is going to go, but you know price will go up. So it's all about bringing your average cost down. So we don't have to then time how high it goes.
Absolutely. Absolutely. And as we always say, you know, you're a successful investor. I do all right. As you can see, I do okay. I do okay. So therefore, we always say, listen, never quit.
Yep.
Because if we can do it, you can do it. And so from all of us here at Investment Mastery and the Lunchtime Investor Show, Merry Christmas!